So I'm going to go through, looks like we got about 6, 7 quotes here to review for different FHA options. So FHA loans, obviously we do that every morning. We do the general 1 unit option, typical scenario, 80 LTV, but obviously there's a ton of flexibility within FHA to do loan down payment, which is a popular request, which obviously affects the MI as well. So it's a little bit difficult to do that live, do all the different options. So today we get a chance to go through all the different variations that FHA affords us. So remember, these are government insured loans. All FHA loans require upfront and yearly mortgage insurance. Other than that, they're pretty similar to conventional. So some slight variations in the way that the loans work and the guidelines, but in general, they're very similar. The main differences are in the MI structures, the down payments and LTV amounts, and some other major differences. But here we're going to highlight the options within the LTV differences and the specialty programs we can add to the FHA. So first up on the list, we always do 1 unit on the live show. Obviously, the most popular request for FHA is they allow multiple units for the same low down payment. So FHA 2 to 4 unit purchase for 3.5% down is typically almost identical to a 1 unit. So great options for our house hackers out there or anybody looking to get a multi-unit property, especially as markets tighten up. Obviously, these types of properties could be viable for buyers that may be priced out of typical single families. So here we have some great options. The lowest cost option, 6.125, actually has a $1,227 lender credit in this example. And we can buy it all the way down to 5.25% for 2.125 discount points in cost. So tons of different options here. Just keep in mind that this does require the upfront and yearly mortgage insurance. But other than that, these are great options, especially for our borrowers looking for multi-unit properties. Now let me go into the next example here, which is a 1 unit, but this is low down using a low credit score. So FHA does not technically have a limit on the credit score, but obviously all of our different investors and banks and lender partners have different limits that they input. So this is a great option for our borrowers who may have a slightly lower credit score than most other banks or lenders offer. But at a 580 credit score, we can offer this program for the standard 3.5% down. So the lowest cost option, 6.75 is par, no cost here on the rate. And the lowest rate option, 5.625 for 2.375 points in cost. So a little bit more costly here to use this option, but still a great option for our borrowers out there that may need a little bit of help to get into the programs, especially since 580 is too low for the conventional options. Now, I think I need to switch the order here. Let me do this one. So this is where we can get even more tricky with the credit scores because FHA does have leniency on those issues. When we have a score lower than 580 down to 550 and sometimes even lower, I'm pretty sure we have other options that Jose didn't highlight here for lower scores, a little bit lower. But if we increase the down payment to 10%, we can get options for 550 credit score, which is lower than most other options out there. So the rate's obviously a little bit higher here. 7.25 rate is the lowest cost option, which still costs 2 points. And 7% rate, which would be the lowest rate option to buy down with the typical points here, 2.5 points. So obviously, if you get a seller credit or other things like that, which are common on FHA transactions, you could buy it down more. But these are pretty standard parameters that we're staying in here. Now, for those borrowers who want to get even more tricky, FHA is very popular for down payment assistance. So Jose highlighted one of our most popular down payment assistance options that we work with, which is our forgivable option, which is typically the request, right? So down payment assistance, there's forgivable and non-forgivable. Forgivable, as long as you do XYZ for usually a certain amount of years, maintain it as your primary residence, not miss any payments, those types of things. Typically, that loan is forgiven, typically after a 5-year period. Every different program varies there. So, not sure which one he quoted exactly. So, let me not put words in Jose's mouth here. But this is our forgivable 3.5% DPA with FHA. So, 3.5% DPA added with a 96.5 FHA loan, standard FHA equals 100% LTV is what we're going to put down on this. So even though it says down payment of 3.5%, that's actually going to be granted to us through the DPA grant. So the rates are obviously much higher in this case, but this option does have a lender credit. So at 8.5% rate, there is a lender credit here of $732. So these are great options. Typically, with the pricing the way it was and the rates where they were for the last couple months, DPA options were just not feasible because even if we had a program, there would be a large point cost to our borrower, which defeats the purpose of a DPA loan to get 100% financing. If you have to pay 2, 3 discount points to get the loan, then you still have to put 2 or 3% down plus closing costs. So it defeats the purpose. Now, with the rates the way they are, this is absolutely amazing program. They can get into the loan and then to the home and still get a lender credit here. So there's no cost here on the lender end when we set this up. We actually get a little bit of a credit towards the other closing costs with this structure here, and 100% financing. Absolutely amazing. Now, another tricky thing we can do with FHA is rehab. So the FHA rehab program is called the 203K, where we can purchase a home that would otherwise not qualify. Maybe it's missing living items, maybe it's missing a kitchen, stuff to cook. Maybe it's missing windows. Obviously, it's not safe or habitable with windows missing. A lot of times these are for REO purchases, stuff like that. So anytime you have something that would otherwise not qualify, we can use the 203K program to purchase the home the way it is and add a rehab budget in order to get to our final amount. So this is 3.5% down of the whole project. So in this example, maybe you purchase, I believe, let me scroll down here. The total purchase price was 500, but we're 203K. That means the total project price. So perhaps this was a $300,000 home purchase with a $200,000 rehab budget. Whatever the math equals, we're going with a 500,000 total project. And with FHA, we can put 3.5% down of that total project here. So with this option, the lowest rates 5.625 for 2.25 discount points and costs, pretty much the same as our standard ones. And 6.75 is the lowest cost option here, which actually gives us a lender credit of $1,145. So pretty cool options here to buy something that may not otherwise qualify and build it into the home you really want, or just be able to fix those issues to make it qualify for the loan where otherwise would not. Now, to take it another step further, we have FHA one-time close construction loans. So one-time close is a little bit different. 203K has to be a house that already existed and at least a foundation. The house could have burned down, but there was a house, there was a plan. It's with the county, it was already there. People were living there. We're building it back. That's a rehab. A one-time close, we're buying empty land, 100% empty lot, and we're building from scratch a brand new home from the ground up. So that's the one-time close construction loan where we get the loan one time, but it may take X amount of time to build a house. In this case, we have a 12-month construction term on this one-time close construction. So 12 to 24 months is typically standard. So 12 months is what Jose quoted here for us. So obviously a little bit higher rates and costs here, but we have an option for 9.25. It's actually only costing 0.375 discount points here. And you can buy that all the way down to 8% rate for 2.125 discount points. Now, these are great options. Obviously, once the borrower gets in the home, gets it stabilized, typically they would do a refinance after they do either FHA or any other one type of one-time close. So this option is typically a not so permanent option. It's an option to buy a lot, build a home, and then once they get settled in there, typically they'll do a more typical refinance. And the final example that Jose has here is a cash out refi for FHA, going up to 80% loan to value, which will pretty much be our standard rate sheet that we saw before. 6.125 rate has no cost. That's our par rate on a cash out refi. And 5.25 rate you can buy it down to for 2.375 discount points in costs. So great options as the rates have gone down all across the board. Before, if we did the show 2 months ago, we probably could not have presented. Possibly the cash out option would have been very expensive, but definitely the one-time close, 203K, and DPA would be very difficult to price out and do with rates going a little bit crazy. So now all these options are very viable. Definitely recommend our team checks out all the cool FHA features that we can use here.
All right. Great programs there. Like I said, might be familiar with FHA, but maybe not some of those other programs here that we can offer.